All right, we have positive markets 30 minutes until the start of the cash trade. I'm Matt Miller.
And I'm Katie Greifeld. Shinoy Bassick is at the Milken Conference in Beverly Hills, and Bloomberg Open Interest starts right now.
It is showtime for Jerome Powell, and Donald Trump is watching. The Fed expected to keep rates on hold despite the president's pressure to cut. And we have signs of de-escalation. Top officials from Washington and Beijing will meet for trade talks later this week in neutral Switzerland. Plus, earnings season is still underway with results from Disney easing fears of a slowdown from the consumer. Katie?
And on that note, let's take a look at Disney shares because they surprised Wall Street with an earnings beat, also raising their 2025 outlook on strong demand for parks and for streaming. You add it all together, shares up 9% right now, Matt Miller. They had been beaten down quite a bit, but still quite a rally.
Yeah, absolutely killing it. On the other hand, Uber bookings missed estimates in the first quarter, citing issues like the Los Angeles wildfires, as well as worsening U.S. consumer confidence and economic uncertainty. Katie, you can see the shares in Uber down 4% in the pre-market.
We're also keeping an eye on the latest tariff developments because Treasury Secretary Scott Bessent and Trade Representative Jameson Greer will enter trade talks with China this weekend in Switzerland. Now, yesterday, Bessent explained how this meeting came together.
I was going to be in Switzerland to negotiate with the Swiss. Turns out the Chinese team is traveling through Europe, and they will be in Switzerland also. So we will meet on Saturday and Sunday. And look, we have shared interest that this isn't sustainable.
Bloomberg's Tyler Kendall joins us now from Capitol Hill. And Tyler, Scott Bessent was careful to set expectations here. He made it clear that these talks will center on de-escalation rather than necessarily getting that big trade deal.
Right, exactly, Katie. De-escalation before they can really talk about any of the contours of a trade deal going forward. And Bloomberg Economics cautions that they don't think there's going to be meaningful tariff relief quickly or easily for that matter. Now, of course, the optimistic scenario here would be they meet this weekend and they agree to lower tariffs on a reciprocal basis. But we know that China, for instance, has called on the U.S. to remove or at least slash significantly levies on a unilateral basis. And while President Trump has said that he's open to lowering tariffs on Chinese imports, saying the current rates amount to essentially a trade embargo, we know this White House would like to see Beijing take the first steps to de-escalate. Perhaps that could mean China pledging to boost U.S. imports, perhaps resurrecting some of those purchase agreements under the Phase 1 trade deal. They could tighten controls when it comes to fentanyl flows. They could loosen restrictions and curbs when it comes to critical minerals, things like that. But it really does remain to be seen exactly what the U.S. is looking for in order to see those talks move forward. And officials tell us that's by design. We keep hearing Treasury Secretary Scott Bessent call this strategic uncertainty. But Katie, to be clear, the other side of this, of course, is that President Trump in recent days has been threatening to just set a rate and walk away from the negotiating table if he's unhappy about how negotiations are going. We did hear from Beijing's Commerce Ministry earlier this morning, who said that they hope that the U.S. can move forward with sincere intentions.
All right, Bloomberg's Tyler Kendall there in the U.S. Capitol. Thanks very much. We'll keep on top of Washington later in the program. We're going to show you Scott Bessent's testimony. But I want to get back right now to earnings on Wall Street. Uber bookings fell short in the first quarter as it sees a slowdown in the ride-sharing business. But second quarter expectations actually beat estimates. Let's discuss with Bloomberg's Technologies, Caroline Hyde. So, Caroline, going the other direction of Disney, Uber says consumer weakness is showing through.
Well, actually, there's some resiliency coming from Dara Khosrowshahi, the CEO, who is going to join us a little bit later. But he's saying, look, thus far, we haven't seen a particular impact on the consumer. But yeah, revenue growth had been slowing. And we're seeing overall revenue up about 14%. People have wanted to see perhaps a little bit faster than that sort of a growth. The delivery side of the equation still very strong, but it really seems to be about people getting into cars. How much are they having to pay a little bit extra? Some of the insurance costs that they've been blaming. They are looking at more affordable kind of offers and products. But the second quarter guide was strong. So I think some analysts and investors are saying, look, we're trimming back because this stock is up more than 40% so far this year. It's a massive outperformer. Wow. And perhaps they just didn't live up to the highest expectations for fiscal first quarter when it came to the ride side of the focus, but they've got a lot of levers to pull. They're looking and leaning into the taxi side. They're looking at AVs in particular. Look, we're having driverless, cars over in Austin going great guns. They say this is really bearing fruit for them. And interestingly, they've been investing in Chinese companies to bring that to bear even more in Europe, for example.
Great point, too, on just how high the expectations were heading in. Similar in some ways to what we saw with Palantir in terms of the stock outperformance. Looking forward to that interview. But let's also talk about AMD. A lot of eyes on this chip maker. The first quarter was actually pretty good, but a lot of caution going forward.
And again, it's about China. I mean, it's interesting that Uber's doing deals in China. At the moment, AMD, Lisa Su, the headache is the $1.5 billion hit to revenues that they're seeing because they can't access the Chinese market with certain chips in the same way that they're tailored for NVIDIA. AMD does the same thing, and some of the more sophisticated chips they had managed to get into China now curtailed. But Lisa Su was really buoyant on the second half of the year. They got the MI4000, the latest and greatest AI accelerator chips and architecture coming out from them in the second half of the year. She's saying that is going to drive our fundamentals more broadly. Analysts have actually been saying, look, if you look at what's been driving revenue, it's actually average selling prices rather than perhaps taking away market share so substantially from an Intel. But they also, of course, had the pull forward effect of PCs, gaming looking relatively strong. And for Lisa Su, she's really just trying to talk up that AI infrastructure demand is resilient even in the face of some of these economic headwinds. We are anticipating a stronger year more broadly for AMD, and analysts have been too. But remember, this stock is down for the year and down hard.
All right, Caroline, always great to see you. Looking forward to Bloomberg Technology today. You can catch that at 11 a.m. But let's check in now on the happiest place on earth, because Disney shares soaring pre-market after the company beat on its full-year profit forecast. The catalyst there were its parks business, also streaming. Joining us now, I'm pleased to say we have Chris Marangi. He is Gabelli Fund's co-chief investment officer. Chris, it's great to have you with us. A beat and raise from Disney. I think some on the street were interested and surprised to see this, given that a trip to Disney World is about as discretionary as you can get. As an investor in this company, how did you read what we learned this morning?
Well, it might be too much to call it a fairy tale quarter, but it was very strong. A lot of, as you mentioned, trepidation coming into the quarter about the impact of macro on visits to the parks. Parks hit it out of the park domestically. Operating income up 13%. Now, maybe it's too early for those macro concerns to bite. There is a long lead time in booking these trips, and people are going to cancel trips on their kids. But they, during the call, which is ongoing, they have pointed out they've had some strong bookings for the next 2 quarters.
In terms in terms of the spend, Chris, I mean, how much longer can U.S. consumers or even global consumers keep up with Disney's rising prices?
Well, they have some very sophisticated pricing models, as you can imagine. They offer a number of different options for consumers. Listen, for many, many years, the U.S. consumer has surprised us with their resiliency, and that continues to be the case. And by the way, it's not just in the parks, but it's in other areas of the business, in streaming, which had a very good quarter, as well as advertising, which looks continue to be strong.
So a wild card for Disney. You saw shares slip last week along with Netflix after President Donald Trump announced plans to impose a 100% tariff on films that were produced overseas. There's still a lot of question marks around that. But Chris, I'm wondering, as an investor, how do you begin to approach a potential risk like that?
Yeah, a lot of questions, obviously, and not really a strong constituency in favor of those tariffs. So I think the probability of them actually coming to fruition are probably low, but obviously we have to take everything that the president says seriously. I think more broadly, obviously, this is one of the first attempts to actually tax a service, a non-physical good. So, I think the unfortunate outcome from that is that it's going to depress investment. And, before you fund a movie, you're probably going to want to know the answer to just how this tariff is going to work or if it's going to be applied.
Chris, I want to ask about Formula One. You cover Liberty Media as well. They had a tough comp because of the, fewer races in Q1 this year than last year. But what's your overall take on another consumer-driven business, right? I mean, it's a big spend to go to F1.
It is, and that's a little bit of a different consumer. That is a very high-end consumer that's going to the paddocks, going to these races. It's very global, as you can imagine. A premium good trading at a premium price. They've got a lot of dynamics. Hard to look at it on a one-quarter basis because of the race calendar. But, they are trying to buy this motorcycle race promotion called MotoGP. Very exciting. The EU is taking a harder look at that. So they have to get through that. And then we've got Vegas returning in the fall. And we've got a movie coming out, Formula One, Brad Pitt. that's going to stir a lot of interest, we think, globally.
Yeah, Brad Pitt also, by the way, narrated hitting the apex about MotoGP, which is a far more exciting motorsport. What do you think their odds are of getting that deal done, and what can they do with MotoGP?
Yeah, I think the probability of them completing that deal is high. I think they've met most of the concerns of the EU. And basically, you've got a blueprint in what Liberty did when they bought Formula One, basically improving sponsorships and promotion deals, et cetera. And you're right, it is, if you haven't seen it, very exciting. It's kind of made for the youth. They're shorter races with a lot of action, kind of made for the phone.
All right, Chris. Unfortunately, we have to leave it there. Always great to speak with you. Hope to do it again soon. That is Chris Marangi of Gabelli Funds. Meanwhile, check on these futures on this Fed Day. Happy Fed Day to you. You can see the S&P 500 giving up some of its pre-market momentum. It's still higher, but only by about 0.2%. You have big tech slipping as well, even though investors really cheered what we heard from AMD last night. The NASDAQ 100 still holding on to gains. For whatever reason, you have small caps outperforming this morning. A relatively quiet morning in the bond market so far, but we know that's going to change at about 2 p.m. today when we get that Fed decision and the conference to follow. Now, coming up, Novo Nordisk rising on expectations that competition for its blockbuster obesity shot Wegovy will subside. We'll hear from the company's CEO next. This is Open Interest.
Let's get to high interest. Look at what's making headlines around the world. The Fed is expected to leave rates unchanged today, a move likely to frustrate President Trump. Officials have stressed recently that while uncertainty is unusually high, monetary policy is still in a good place to balance their goals of fostering maximum employment and stable prices. Bloomberg special coverage of the Fed decision begins at 1:30 p.m. New York time. And the dollar may face a $2.5 trillion avalanche of selling as Asian countries unwind their stockpile. That, according to Stephen Jen of Horizon SLJ Capital. He says the U.S.-led trade war may lead some Asian investors to repatriate chunks of funds or ramp up levels of protection against a weakening dollar, potentially triggering an exodus from the world reserve currency. Bloomberg's dollar gauge has dropped about 8% from a February high. And Weight Watchers is filing for bankruptcy. The company, known for its diet programs, once endorsed by celebrities like Oprah Winfrey, has struggled to compete with blockbuster weight loss drugs like Ozempic and Wegovy. The company did offer a few weight loss drug options on its platform, but found it challenging to convince clients that its programs were still worth their time. Katie?
Well, Matt, on that topic, Novo Nordisk lowering its outlook for this year, reflecting headwinds in the U.S. market. But investors are looking past that forecast and focusing on the upsides, mainly diminishing competition for its blockbuster obesity drug, Wegovy. Earlier today, I sat down with the CEO of Novo Nordisk, Lars Jorgensen, and asked about those diverging data points.
We are now in a situation where we can supply the demand in the U.S., and FDA has taken us off the drug shortage list, and that means that it's illegal to do compounding, so that has to stop, and that creates the opportunity for us to drive a bigger growth in the scripts for the legitimate high-quality product from Novo Nordisk. And when we lower the guidance for the full year, it is really because of what the impact was of compounding in the first quarter and probably also a bit into the second quarter. And we have a relative steep comparator in the second half of the year. So you should see this guidance as one of us really stepping up in the second half of the year and getting to more and more patients and really moving forward in a business environment with a much lower compounded share of the business, really down to the rare cases where personalized is really needed.
I also asked him about how he's preparing as President Trump threatens tariffs on the pharmaceutical industry.
It's one of those that's a bit difficult to predict right now because there are quite a number of different messages coming out. If you look at our manufacturing footprint, that's one of having invested significantly in the U.S. Specifically, we invested $24 billion in the U.S. Operations over the past 10 years. We have more than 10,000 people working for us in the U.S., and we actually produce and export more from the U.S. than we import to the US. So when other companies were moving manufacturing out of the US to perhaps save tax, that was actually the time where we started doubling down and investing in the US. So we have API manufacturing in the US, we have fill finish products, and when we talk about an all obesity treatment like Wegovy in a pill, that's actually 100% produced in the US. The API is made in the US, the tableting is done in the US, the packaging is done in the US. So it's really a US-made product to Americans. So I think we have a good setup.
And that was my conversation with Novo Nordisk CEO Lars Fruergaard Jorgensen earlier today. And it's hard to overstate the impact of these drugs. Of course, the shares have struggled of Novo, but just the cultural impact. Just today, there was a story about how Weight Watchers has filed for bankruptcy due to these GLP-1 drugs. These drugs that Novo Nordisk and Eli Lilly have put forth, they've been the ultimate disruptor when it comes to healthcare.
Right. On the other hand, these drugs have really helped other companies like Hims and Hers, for example, or CVS, as they Novo Nordisk makes partnerships with them. It's interesting that during the shortage, U.S. compounding pharmacies were able to make copycat drugs, but that will no longer be the case after the end of this month.
Yeah, Novo really optimistic about that, saying that they're going to face reduced competition from those compounders, and as such, the second half of this year for them should be pretty big, but that remains to be seen. And it's a nice reminder that earnings season is still going on, and we have plenty of movers.
Also, I really need to fight for just one shot. Just one shot of these things. Some more movers on our radar. Arista Networks forecasts clouded by the tariff overhang. You can see those shares down 6.5%. So Supermicro offering a weak outlook. It sees customer delays. You can see those shares down by 6.5%. And Marvell, chip maker, delaying investor day and narrowing earnings guidance. Those shares almost decimated today. So a lot of concern in kind of the smaller cap AI universe.
Yeah, big time. And it's interesting to see Marvell see such a big decline. You do have AMD shares up a little bit. It seems like investors weren't very impressed by the outlook, but still, compared to how some of their peers are faring, not so bad. Now, coming up, we're almost 10 minutes away from the opening bell, and we'll begin today's trading day with Meredith Whitney. That conversation up next. This is Open Interest. Well, some S&P 500 companies are under pressure due to U.S. consumer concerns. Goldman Sachs strategists note that earnings estimates for consumer discretionary and consumer staples have been slashed by about 8% and 4% respectively. That compares with 3% for the broader S&P 500. Let's unpack this all with Meredith Whitney. She is CEO of Meredith Whitney Advisory Group. And Meredith, it is fantastic to see you in person.
Thank you. It's great to be with you guys. It's been a while.
It has been. This is the first time I've met you, so it's really great to have you here. And I want to start exactly with this consumer, because it feels like that's where a lot of the epicenter of concerns about the recession are right now. How long can the consumer hold up, and whether this resilience that we're seeing is sustainable? And I wonder where you fall in that debate.
So I love studying the consumer. It's my favorite pastime because the data is so granular. But it's still really hard now. So the banks that reported, it seems like a year ago, but just 3 weeks ago, said the consumer was fine. And across the board, you go from prime banks then to some subprime lenders, they didn't really show much. But then you go into the quick service restaurants last week that said the lower end consumer they saw less foot traffic. And I look at Walmart numbers. One of my favorite functions on Bloomberg is ALTD. You get weekly retail data and foot traffic data, which is, so you don't have to wait a month to see the data. And Walmart had said that more of their consumers are high-end, more high-end is driving business. And the foot traffic is trailing spend. That's not the case with some of the lower-end, like dollar stores. But my point is things didn't fall off a cliff with spending. So the last data point is the last week of April, and things didn't fall off a cliff from spending. So it's down from the Easter week, but it's still positive. And so you'd think that if the consumer were really struggling, and look, over 50% of households have been struggling since COVID stimulus checks dried up. After-tax earnings in the year after consumer stimulus checks dried up were down on average 18%, right? Because COVID was non-tax. And you've seen home equity rise at a faster clip than credit card lending. So people are tapping into the equity in their homes. And it's seniors, right? So 44% of home equity is taken out by seniors, which is counterintuitive.
It's crazy.
It's crazy, right?
Yeah.
So you see, I divide it into different cohorts. So the senior, which everyone thinks the boomers have all this money, that's a small portion. Seniors are living paycheck to paycheck.
Even though we hear from, I mean, we were talking with people who are saying $75 trillion is how much the baby boomers have. I think Ed Yardeni said that. And
that aggregate number is correct, but only 1 in 10 seniors can afford assisted living. So they're staying in their houses. This is one of the problems with the housing inventory. They're staying in their houses longer because they can't afford to move out. And the problem is Invitation Homes that reported last week, and they're one of the larger single-family rental companies, said that their move-out to first-time buyer ratio was the lowest it's ever been.
All right, Meredith, we're going to keep you with us. Very excited to ask you also about any parallels you may see between now and the financial crisis. Meredith Whitney with us through the opening bell. This is Bloomberg. All right, we are looking at futures that are slightly positive after a couple of down days, that 9-day rally coming to an end, but still hovering over 5,600 at the close yesterday. You can see S&P futures up 0.2%, NASDAQ futures up 0.1%, a little bit of AI chip maker weakness today, but it hasn't come through in NVIDIA, which is still unchanged, and that's very important. You can see the New York Stock Exchange here, FSM ringing the bell there, Fortuna Mining, and you've got Nextera down at the NASDAQ marketplace, Nextera, I should say, down at the NASDAQ marketplace. What we're really focused on today is consumer strength or weakness, right? Because we see in Uber a little bit of weakness maybe coming through, and in Disney a lot of strength.
Yeah, totally different story when you take a look at Disney. Surprising Wall Street with a beat and a raise, beating on earnings, raising its 2025 outlook on strong demand for parks and for streaming. You can see shares reacting in a big way here, Matt, up 10%. This has been a badly performing company, but totally different story, at least for this morning, at least right at the opening bell.
All right, Uber bookings missed estimates in the first quarter, citing issues like the LA wildfires, as well as what they said is worsening U.S. consumer confidence. Obviously, we've seen that come through in the soft data for sure, and economic uncertainty. And the shares, you can see intraday down 3%. So not as bad as we saw in the pre-market, but still down substantially. Of course, Uber has been up about 43% year to date. So it's been an incredible year for the ride-sharing company. We are back here at 731 Lex with Meredith Whitney, the CEO of Meredith Whitney Advisory Group. And Meredith, I spent so much time reading your research during the financial crisis. You called essentially that collapse, and Bloomberg dubbed you the Oracle of Wall Street. I had hair then. You look exactly the same. Do you see parallels between the great financial crisis and what we're seeing right now, what we're possibly at the beginning of?
I don't. And here's why. I think you had unemployment go to 10% during the great financial crisis. And I think unemployment goes 5.2, then 6.2, and that's from the retail sector and the hospitality and leisure sector. I think those get hit first, and you're going to see a cascading. The banks are in much better shape.
But you see 6% unemployment?
I see by the fall 6% unemployment.
Wow.
And the banks are expecting 7% unemployment. So they're prepared, and they've got so much capital. There are things that can mitigate that, but I'm not convinced that they're the priorities of the administration. It seems as if, my understanding, my expectations were that they'd focus on deregulation and tax cuts. And it's been tariffs. So people were caught by surprise. So it's different sequencing of how things happen. And so if charge-offs go to, I don't think charge-offs go to 7%, but I think consumer spending slows down materially. And if banks I mean, banks can outperform because they've got so much capital. If they relieve the regulatory capital constraints, they can do okay, but there's not a lot of demand. So what you see in consumer credit is people aren't spending. So credit card debt outstanding isn't growing that rapidly. It's up like 4%. So I think people are pulling back.
There's a lot to dig into there. I have to go back to 6% unemployment by the fall. Does that also translate into a recession? I mean, I don't know how you have a spike up to a 6% unemployment rate and not have a recession. And if that's the case, how do you position in that environment? What should investors be doing to prepare?
Well, I don't think a recession is priced into the market, and I don't think it's a deep recession. I think it's a mild medium recession. You had a deep recession after the financial crisis. That was, a year and a half in the making, or 2 years in the making, right? Because subprime blew up in 2007, and it just caught up with the big banks. The big banks will not be involved now, but the consumer—
They've learned their lesson.
Which is already struggling, is going to struggle further, and that will relate into job losses. And I'm not like the 6%, 5-6% by the fall doesn't include what happens to ports and trucking, and I'm just focused on hospitality, leisure, and retail. And those are, I think, the jobs that get hurt the most are the Main Street jobs. And ironically, that's what the administration says it's rooting for. And it's just, there are going to be all sorts of unintended consequences that didn't happen. Like, people knew what they were doing before what caused the credit crisis. I think this is just sort of self-inflicted unintended consequences.
I wonder what the Fed does, because, I guess today we could hear kind of a hawkish tone from Powell, but this Fed, if we got to 6% unemployment, would cut drastically, wouldn't it?
I mean, they would cut. I think you're probably going to get 2 cuts by the end of the year.
Only 2 cuts.
I think so. I mean, 5%? What's the natural rate of unemployment? 6% isn't. I mean, it's still 40% less than a severe recession. So they'll be careful about sequencing this right. And the data is not, like, the data's on their side. They don't have to do anything. What they could do today is, what they did last meeting was take their foot off the brake of quantitative tightening. And that might allay the markets a little bit. But,
today, you mean today?
Today, they could do that. I'm not sure, obviously I don't know, like you guys don't know, but they're not going to do anything with rates.
Right. That seems to be the expectation. And just for those looking for context at home, the unemployment rate, as we learned last Friday for April, was 4.2%. So, as you say, I mean, 5-6% unemployment. When you take a look at the long-term average, it's not that dramatic, but certainly the rate of change, I think, would turn a lot of heads. And for a generation of investors, that seems unreal.
Well, it has a lot. Look, it has implications to so many different stocks. And the way I get there, to explain, the hospitality and retail sector, unemployment went down 5% in the great financial crisis. So you take that 5% and you get to 5.2. And then you add on if it goes to 10%, which it very easily could, right? I mean, there are retailers that are hanging on by a thread. That's to 6.2%, and that does not include transportation or a host of other industries. That's just conservative.
So there's a lot of potential pain coming. I mean, if you map out that environment, retailers, like you say, hanging on by a thread, in your words. Is there any sector, is there any particular industry that you think manages to do well, at least relatively speaking, in that sort of landscape?
I'll tell you what has held up well is grocery, because grocery is unaffected by tariff, and people are eating at home. They're not eating out. So grocery usually is a good recession investment.
It's a staple.
It's a staple.
I hope we can have you back soon.
I'd love it.
Been great to talk to you. Look forward to getting your research. Meredith Whitney, they're talking to us about her expectations. Let's get some more of the movers on our radar. for today's trade, AMD, Katie was mentioning, warning that China rules will hit revenue, and that clouds the outlook. But AMD is up 3%.
Yeah, I mean, you compare it to what we saw with Marvell and maybe investors doing a little bit of a pair trade there because it wasn't that bad when it came to AMD. Let's also talk about Arista Networks because tariff overhang obviously hurting that company, and those shares today down about 8%. And then Supermicro Computer, Matt, issuing a weak outlook sees customer delays. This is the story that just keeps on giving when it comes to Supermicro shares.
Absolutely. They provide a lot of fodder for the news. This is, though, still a $42 billion company. So it's a very interesting shop there. And it's right now down about 5%. Did I look at that?
I think you were looking at MSCI.
I was looking at MSCI. Sorry.
We're going to do
MCI, Supermicro Computer, is actually they're still a $19 billion company. So it's still pretty big for a company that had to say goodbye to any reputable auditors for a little while. Coming up, Barrick beats earnings as it continues its move into copper. We're going to speak with Mark Bristow, the CEO and president of Barrick, next. This is Open Interest.
Welcome back to Open Interest. A check on this market with green on the screen. The S&P 500 trying to break 2 straight days of losses. It is Fed Day, though, so everything can change at 2 p.m. when we get the decision and then 2:30 when the chairman actually starts speaking. But at least for right now, across the board, green on these indexes. It's time now for our top calls, some of the analyst action in focus this morning. And we start with Wynn Resorts getting upgraded to a buy over at Bank of America. The analyst cites the opening of a new casino resort in the Middle East as a key catalyst that will help de-risk its China exposure. Next up, we have Marvell getting a downgrade over at Cantor Fitzgerald. The chipmaker cut its revenue forecast and postponed its investor day, citing an uncertain economy. Cantor analysts, for their part, worry about the lack of stickiness in Marvell's custom silicone business. Stickiness is a good thing here. Finally, Constellation Brands, it's the maker of Corona Beer and Kim Crawford Wines, just delicious, getting upgraded to a buy over at Truist. The firm says that investor cynicism on alcohol consumption is too high, Matt, and that investor sentiment on Constellation has bottomed. The shares higher by about 1.4%.
Wait, what's the cynicism on alcohol consumption?
They think that people are moving away from alcohol. I assume Gen Z doesn't really like alcohol is one of the narratives that's out there.
What, because they prefer weed, or what's the idea?
I don't know. It just seems like Gen Z, they don't drink, they don't date the same way as people used to, and non-alcoholic options are really popular.
I bet they're going to drink. Yeah. They're going to drink. Let them get a little bit older. All right, let's move on to actual gold right now. Barrick is one of the world's top producers. It posted higher than expected earnings this morning, and the surge in gold prices obviously helped the company raise cash as it continues to move into copper production as well. Joining us now is Mark Bristow, the CEO of Barrick. Mark, great to have you on the program. Obviously, you're in a good mood. We just were showing your shares there and the price of gold year to date, and it's been just a win-win-win for you guys. How long can this go on? I mean, are we, you think, peaking in terms of the price of the yellow metal?
Well, Matt, nice to see you again. The question is, can the gold price stay up at these levels rather than peaking? I think the answer is that it's more likely to stay higher than go lower at the moment, given the dynamics across the global economy, and that's what we're seeing. And on top of that, our industry is ex-growth, so a lot of tightness in the supply side, some significant demand. I think the de-dollarization drive and the real focus on bullion has been the subject for the last couple of years, and I think we're now starting to see the investors sort of embrace the higher gold price, and that augurs well for equities who've been lagging for some time now.
Well, your ticker, your stock ticker is gold, which is one of the best tickers that's out there. But I want to talk about the copper business a little bit, because some of the commentary coming from Wall Street, from the sell side, was analysts noting that you had weaker performance at your copper mines, which was offsetting to some degree that first quarter earnings and revenue beat. Walk us through what's going on that side of the business.
No, Katie, we are expanding our copper business. I've always said that if you want to be a world-class global gold producer, you have to embrace mining copper, because the big deposits of gold left in the world today are what we call in geology porphyries, and that means they come with both gold and copper. And a classic example is the world-class Reko Diq project that we're developing in Pakistan, which is a gold mine in its own right, as well as a world-class copper mine. And so that's our focus going forward. At the same time, we're privileged with 6 Tier 1 gold assets within our portfolio, and now shifting to exploit some of these gold copper projects around the world.
What are your biggest costs, Mark? I have to imagine energy or fuel rank high up there for you, and I would guess, at least in some places, you're competing with data centers or crypto miners. What are your biggest costs, and how do they look going forward?
Biggest costs are by far power. And as you know, the fuel prices come down, so that's softened. Of course, the world today, with its chaotic supply chain driven by the sort of very dynamic global economy, is a challenge. Second to power is people, and so those are the two big drivers. And recently, logistics has become a big challenge. I think it's become a big challenge for any industrial business, and how you manage the supply chain is important.
I also want to get your thoughts on M&A. Obviously, your shares are doing very well this year, as Matt highlighted. I know that you're selling mines as well, but when it comes to acquiring potential assets, is that something that you're looking at, M&A on the horizon potentially?
Katie, I've been in this industry a long time, as you know, and M&A works at certain times in the cycle. It's tough to see M&A deliver value at the top of the cycle. We had a spate of mergers and acquisitions back in 2019, 2020. That built the foundation of Barrick. What we're pointing to now is the ability to grow organically. We're pointing to a 30% increase in what we call our gold equivalent ounces, so both gold and copper, out to the end of the decade, which is substantial. It's all organic. It's cost us about $10 gold equivalent ounce. And so that's really the way to go in mining, is when you can discover and develop and deliver organically and not have to pay a premium on a premium in the market.
Mark.
So we're in a great position, and we're tidying up our portfolio and really refocusing on Tier 1 assets.
Mark, I want to ask you just quickly about something you mentioned at the top, de-dollarization. We have a story on the Bloomberg from currency analyst Stephen Jen, who says we could see an avalanche of sales, $2.5 trillion of reserves build up from mostly Asian countries. Do you talk to people who are looking to get rid of their dollars and would prefer to hold gold at high levels?
Yeah, I think, Matt, it's a very important, and as a member of the World Gold Council, we're seeing this, is that some of the emerging markets, given the dynamics, global dynamics, some of the central banks, and it's been going on for a couple of years now, when I started out 30 years ago, very clearly the primary reserve in every central bank was US dollars. And what's happened is that many of the emerging market central banks, as well as the developing economies like Russia and China, have spent some of their dollar reserves to buy gold to balance their central bank reserves. And as you know, the gold price has gone up, so that's reinforced that behavior. So I think the view is that de-dollarization has moved a little further than everyone expected. Right. Although the US dollar is still a reserve currency, gold is becoming an important part of those reserves.
And that has certainly been to your benefit. Mark, great to speak with you. That is Mark Bristow. He is the CEO of Barrick. Now coming up, Disney jumping after beating estimates and raising its profit forecast. We'll take a closer look next. This is Open Interest.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on what stocks are doing right now. The S&P higher after 2 days of declines, 56.22, the cash level. NASDAQ also gaining, but only 0.1%. We have kind of a mixed trade if you look under the hood. AMD is actually up and Supermicro down. We've had some negative news out of chip makers and out of the AI space, but as you can see, that results in a mix. Novo Nordisk is up after Katie's interview with Lars, Fruergaard, Jorgensen this morning. Analysts or investors, I should say, are optimistic about their chances when it comes to selling more Wegovy. Weight Watchers, on the other hand, is down. One driving the other into bankruptcy. Uber is off on disappointing consumer news, but Disney is up on positive consumer news. So there's, Katie, arrows going in both directions wherever you look.
Let's talk a little bit more about Disney, as you highlight, up 9.5% right now. We're joined now by Geetha Ranganathan of Bloomberg Intelligence. So a beat and a raise. I want to talk specifically about streaming because in your preview note, you had written that Disney had gone all in on streaming and looks like it's really paying off.
It's paying off big time, Katie. And we've seen that not just with subscriber growth, which they again posted a modest increase in their subscribers, and they guided to an increase in the fiscal third quarter as well. But more importantly, it has really been this whole turnaround story. I mean, just a few years ago, this company was losing about $4 billion on its streaming unit. And so far in fiscal 2025, in the first half, they've already posted close to about $630 million in operating profit, on track to meet their goal of well over $1 billion in operating profit. And it's not just the near-term outlook, right? It's like as you look out the next few years, this is going to be a source of tremendous upside for them. I mean, it's 4% margins this year, but you look at Netflix and they're at 30% margins. So that's kind of what we're tracking to in the longer term.
Geetha, in terms of the president's intention to put tariffs on films made overseas, how do you work that into your model? Does Disney film a lot overseas?
They do, just like all studios. I mean, it's obviously they get benefits in terms of tax concessions, filming in different parts of the world. But, his post was just so cryptic and there's just not so many details at this point. But even if you kind of look at, 100% tariff scenario, even in a worst case scenario, yes, it will have, a far-reaching effects, I think, not just for Disney, across the whole ecosystem. But again, remember, Disney is a very, very well-diversified company. If you just look at the studio itself, it's less than 10% of Disney's revenue. So I don't think it would be as onerous as, one might think at first glance.
All right. Geetha, thanks very much. Geetha Ranganathan there of Bloomberg Intelligence talking to us about Disney. Coming up, Treasury Secretary Scott Bessent is on Capitol Hill again. He's going to testify before the House Financial Services Committee, and we're going to bring you that testimony next. No doubt he's going to talk a lot or be asked a lot about tariffs and negotiations with the Chinese. They're going to meet in neutral Switzerland.
Yeah, so he's been a busy guy. He was at Milken, now he's in D.C., going to Switzerland, and we'll track all of it.
This is Bloomberg Open Interest. We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
And I'm Katie Greifeld. Sonali Basak is at the Milken Conference in Beverly Hills, and Treasury Secretary Scott Bessent, he's back on Capitol Hill this hour. This time, he'll be testifying before the House Financial Services Committee. Investors also counting down to the Fed decision. And with that in mind, let's take a look at the setup right now. You're looking at the S&P 500.
Hey, we have a camera pointed at a camera.
We're going to show the S&P 500. I sure hope, because it's up 0.4% right now. There it is. It was nursing 2 straight days of losses, set to break that before Jerome Powell takes the mic at about 2:30 p.m. today. Of course, we'll get the decision itself at 2 p.m. No one's really expecting anything, though, Matt. It seems like it'll be much more about the words, the tone, the posture, and body language of Jerome Powell at the press conference.
That is true, although, as Meredith Whitney pointed out, what they could do is dial back on quantitative tightening.
That's true.
And as she was saying, that's one option that they have. So it's not necessarily expected, but it would be interesting. And you could see other smaller moves like that. But yeah, I think a hawkish tone is what this market is a little bit worried about. And certainly what the president of the United States does not want to see.
Yeah, absolutely. And of course, Treasury Secretary Scott Bessent is just the warm-up act, and we'll be hearing from him imminently. Yeah,
let's talk about that right now. The camera we were pointing at was on Capitol Hill at the House Financial Services Committee. In just a few minutes, Scott Bessent is going to show up there and be peppered surely with questions about his upcoming weekend meeting with the Chinese in Switzerland. Bloomberg's Tyler Kendall is at Capitol Hill and joins us now. So, Tyler, what do we expect to hear from Scott Bessent to start with? And then I guess everyone's going to want to know about a de-escalation with China.
Yeah, definitely, Matt. And I can say that he is in the room behind me because I watched him walk in and he did not answer any of my shouted questions, including whether or not the U.S. would be willing to lower tariffs on Chinese imports this weekend when they start those jumpstart negotiations. No doubt that is going to be driving the conversation as we got to that development yesterday that they are going to seek to de-escalate this situation. Now, he's in front of House Financial Services. This is a full committee hearing. It's going to be much longer than yesterday, as every member wants to get a question in to the Treasury Secretary. I did have a chance to catch up with the chair of the committee just moments ago, French Hill. He told me, yes, tariffs are going to be driving this conversation, but he personally is interested in asking the Treasury Secretary about the U.S.'s future role when it comes to multilateral institutions like the IMF and World Bank, so expect that to be on the agenda. And then I'd add one more to the radar, which is that the Treasury Secretary really has been pushing that this is about the broader economic agenda. Look past trade, but also to tax cuts and the reconciliation package. And he's going to get some tough questions on that today, including potentially by some in his own party. There are at least 3 members of the House Freedom Caucus that sit on this committee. They want this White House to commit to some deeper spending cuts in order to offset that critical tax cut plan that the White House is really banking on.
And so we'll hear from the Treasury Secretary in just a few moments. But Tyler, walk us through how yesterday went. What sort of questions did he face, and what was the reception?
Right, definitely. Well, it was a smaller committee. It was an oversight committee. It was actually more geared towards the Treasury Department's fiscal year 2026 budget. But he did make some news when it came to tariffs. He reiterated, of course, that we could see a trade deal as soon as this week, a trade agreement, not, of course, a full-fledged deal. We've yet to get an update on that. But then he outlined sort of a timeline saying that he wants to see at least 80 to 90% of our top 15 trading partners clinch a trading deal by the end of this year. He downplayed the economic risks when it came to the tariff plan. And importantly, he deferred when it came to a potential X date. We are looking very closely at that. The Treasury, of course, has said that it is forthcoming, but that is something that in Washington we're watching because that's likely going to serve as that hard deadline that lawmakers are going to be up against in order to pass that reconciliation package. And already the debate is underway here on Capitol Hill. Actually, while Scott Bessent is in this room, there's another committee hearing going on right now where they are debating the future of potentially Medicaid cuts. That's in front of the Energy and Commerce Committee. So you could expect to see some headlines from that later today as well.
All right, Tyler, we'll definitely be hearing from you later in the day. Tyler Kendall reporting live from Capitol Hill. For more on the Fed decision, we're joined now by Bloomberg's Michael McKee. He is also in Washington, D.C. And Mike, I don't know if you heard us talking to Meredith Whitney. She suggested that maybe the Fed could dial back a little bit on quantitative tightening today. What are you expecting?
Well, right now I'm doing the body language you were talking about from Jay Powell, because he doesn't want to give anything away today. I mean, the Fed is in a situation where they're darned if they do, darned if they don't. There are people who think they should be prematurely or preemptively cutting, rather, and others who think that would be really dumb. So you're not going to get any change in interest rates today. There are no new economic forecasts, no new dot plot. What do we get? Jay Powell. And Powell, as you mentioned, is going to be the key to any headlines today. He's going to say we can afford to wait. It's better to be late than to be early in the wrong direction. And if we ask him about Donald Trump, I'm sure he'll say again, I'm not going to comment on that. As to Meredith Whitney, at this point, I don't think the Fed's going to be considering dialing back on QT because they already did. They capped it at $5 billion a month now, so it's barely moving down, and it's just kind of in a holding pattern. They're getting very close to the end, so that wouldn't really move the needle at all. This is Fed Fund futures, by the way, for July, which is when people think maybe the first move might be. And I just want to point out that Fed Funds futures trading is basically useless these days. You can see the volatility there. Every data point, every Trump tweet, everything that comes out moves this around. Nobody knows what's going on. And so we're not even going to have a good idea after Powell what's going to happen. The markets will do their interpretation, but he's not going to say anything that would give people a definitive idea of where to put their money on those futures.
I'm going to keep a close eye on your body language when I ask you this question, because in our conversation with Meredith Whitney, she also said that she could see the unemployment rate rising to maybe 6% by the fall. But she also expects that the Fed would only cut about 2 times this year, even in that scenario. And Mike, I'd love for you to, look back to prior periods. And if we did get somewhere close to 6% on the unemployment rate, I mean, how would the Fed respond to something like that, given that we're at 4.2% in April?
Well, she's going to be on the high end. Most people don't think that they would get anywhere close to 6%. The high forecast I've seen from other people on Wall Street is about 5%, but that's over the course of a year and a half. If we got a move to 6%, the Fed would definitely be cutting. It would be a sign that the economy was in big trouble. And between now and the fall, depending on how fast this move came, they would probably cut at most meetings. Now, do they cut if it goes up very slowly? Not the same rate, but they would, if they get maybe above 4.5%, 4.6%, start to consider cutting, depending on what's happening at the same time with inflation.
All right, Mike, thanks very much. Bloomberg's Michael McKee there in Washington for the Fed meeting. We're going to be sure to watch any questions that you throw in to the ring there. Bloomberg's special coverage of the Fed decision begins at 1:30 p.m. New York time. Definitely coverage you don't want to miss. Stay tuned for the whole day. Why not just leave it here? Switching gears, though, to the world of cars. BMW is faring better than its rivals in the transition to battery-powered cars. And I thought it was really fascinating to see first quarter sales of EVs at BMW rising 32%. For more, we're joined by Bloomberg's Craig Trudell, our car czar, who runs global coverage for us out of Europe. Craig, this is a pretty good standing for BMW and EVs. Is it just that they're taking share from Tesla, or are more people opting for their electric vehicles than their gas-powered cars?
I think the Tesla element is a really interesting one because, we did an analysis at Bloomberg years ago of sort of, who was standing to gain the most as Tesla was on the rise and kind of emerging with the Model 3. And BMW was at the top of the list. And so, it sort of stands to reason that as Tesla now, has some trouble with keeping up that momentum and even slips in places like over here in Europe, that you would see, some consumers going back to a brand that they're familiar with and have driven in the past. I think, here in Europe, we also have tougher emissions standards in the EU that took effect this year. Those regulations are going to be softened a little bit, but manufacturers have to sort of plan for that, many months in advance. And so what we're seeing as well is just a broader sort of, bit of momentum for European manufacturers because they weren't necessarily able to count on the fact that there was going to be some, regulatory relief implemented in 2025.
Yeah, European EV sales for BMW were up twice as much as the global sales. 64%, I think, was the gain. Craig, we're showing a chart here on auto imports into the U.S. And the shocking thing, I think, for most people is that General Motors imports more vehicles into the U.S. from overseas than any other manufacturer, including Toyota, Hyundai, and Honda. I don't think a lot of people knew that GM was making so many cars on foreign soil and bringing them back here. Does this mean they're hit the hardest by President Trump's tariffs?
Yeah, I think, the fact that they have a lot of manufacturing in Canada and Mexico is definitely something to take into account there, where, in the past it was not necessarily frowned upon, particularly to import from Canada, right? And I think Trump has kind of made that sort of verboten and would like for manufacturers to knock that off. But I think, our colleague Keith Naughton's story on this today is also, really important in that it calls out the role that South Korea plays in allowing GM to bring particularly some of its most affordable models to market in the U.S. and make some money on them. And they've had a presence in South Korea for a long time and relied on imports from that country for quite a bit. That is something that's going to be very much high priority for us as a sort of area of interest, is if and when the U.S. and South Korea are able to come to the table and agree to a trade deal, will there be some relief offered to GM, or will the administration want GM to move any production that they have in South Korea to the U.S., and what sort of complications would that bring for General Motors?
It's funny, on a personal note, the last 2 American cars that I bought a Chevy Silverado pickup truck. It was made in Mexico, still a fantastic vehicle. And I bought a Dodge Challenger Scat Pack wide body. It was made in Canada. I also love that vehicle. But it's so funny that people see these cars in my driveway and think I'm buying American, and actually, they're coming from over the border. The other interesting thing that I think ties all of this together, Craig, is that BMW, so GM imports more cars to the U.S. than any other company. BMW exports more, certainly in terms of dollar volume, from the U.S. to other countries than any other car maker, than Ford, Stellantis, or GM. To them, I guess these tariffs don't make such a big difference.
I think it's going to be really interesting to watch, obviously, because we have, this potential for, other places in the world to, as they're evaluating how they want to respond to Trump's tariffs, do they want to hit U.S. car exports? And if they do so, they're not necessarily going to hit U.S. companies. These other companies, German companies in particular in the auto sector, are going to sort of bear the brunt of that. So if you're sitting in Brussels and trying to decide, how to respond to these measures that the Trump administration is taking, how do you, kind of hit back on Washington without your own companies sort of being caught up in the crossfire? And that's a tricky thing, because, we've talked about this before, the idea that, GM has kind of thrown in the towel on trying to compete over here in Europe. And so there's not necessarily a way in which you're sort of on a level playing field in terms of being able to hit back if you're sitting in Brussels.
All right, Craig, really appreciate your time. That is Bloomberg's Craig Trudell. He helps lead our global autos coverage from London. Meanwhile, back here in the States, we're still awaiting Treasury Secretary Scott Bessent's testimony. You can see the live shot is there. We are waiting for the Secretary to begin speaking. And as we wait, a quick check on these markets, because the S&P 500 building on its gains. It's up 0.4% on a pretty big day. We have the Fed decision coming at 2 p.m., our special coverage starting at 1:30. So everything could change. But at least for right now, you do have green on the screen. I will note, on pretty light volume right now, volume down about 14% versus the 30-day average. The big tech names also seeing a bit of a bid, even though we did see some weakness when it comes to some of the chip makers, but the NASDAQ 100 up about 0.4% as well. And the bond market, crickets, pretty quiet right now when you take a look at the 10-year Treasury yield, pretty much unchanged. But let's go back to the equity picture and let's take a look at some single stocks moving this hour. We've been talking about Disney for the entire show, and that's because it surprised Wall Street with an earnings beat and a raise to its 2025 outlook on strong demand for parks and streaming. Shares up about 9.4%. I think a lot of folks were surprised about this one, Matt, simply because we're also worried about the consumer. You think about taking a trip to Disney, that is very expensive to do.
It does seem expensive. I saw a headline on Fox earlier that a guy in Florida was spending $1,400 a day taking one kid to Disney. And yeah, I mean, I guess we're all going to face that hurdle at some point.
The Disney hurdle?
Yeah, but it's something that you pretty much have no choice, right?
No.
You have to take the kid to Disney.
Disagree. I will never. It's too hot. The lines are too long.
Oh, just wait. I guarantee you do it.
I doubt it, but we'll check in on this in like 5 years. But let's talk about Uber, because its bookings missed estimates in the first quarter. It cited issues such as the LA wildfires, as well as worsening U.S. consumer confidence, Matt, as we've been talking about amid all the uncertainty out there. So when we talk about the consumer, it's hard to refer to the consumer as a monolith, because apparently, you know, they're still paying up for those streaming packages. They're still going to Disney, but when it comes to items such as booking an Uber, it's not as clear cut.
Yeah, you know, I wonder if this is a tale of two tiers of consumer, right? And you hear that a lot, but all of the numbers that we got last year suggested that across income levels, savings were depleted. Across income levels, debt was higher. Across income levels, much more spending was going on plastic. So I don't know if you can break it down as much now as you could then. Certainly wealthy consumers are still going to be going to Disney and spending $1,400 a day. And, you know, less wealthy consumers are going to be trying not to take as many Ubers as they have in the past. It is important to point out that Uber did forecast better than expected second quarter numbers.
Right.
So maybe they're not doing as badly as that one stat shows. And of course, the performance has been incredible, up more than 40% year to date.
Right. Well, we are now going to go live to Washington, where Treasury Secretary Scott Bessent is speaking. Let's listen in.
America first does not mean America alone. To the contrary, America First seeks to expand U.S. leadership in international institutions like the IMF and the World Bank. By embracing a stronger leadership role, the United States will restore fairness to the international economic system. I look forward to answering your questions on this topic today, and I look forward to providing you with a broad overview of Treasury's achievements and future plans. Specifically, I would like to highlight the Department's efforts to boost U.S. economic growth, improve government efficiency, and target illicit actors that threaten our national security. The core components of the Trump economic agenda are trade, tax cuts, and deregulations. These are not standalone policies. They are interlocking parts of an engine designed to drive economic growth and domestic manufacturing. Tax cuts and cost savings from deregulation raise real incomes for families and businesses. Tariffs create an incentive for reshoring jobs and fair trade. And deregulation complements tariffs by making it easier to invest in energy and manufacturing projects. Already, this agenda is bearing fruit. In the first 100 days of the new administration, 464,000 new jobs were added to the economy. In April alone, over 177,000 American jobs were added, more than 40,000 more than economists predicted. All the while, employment remains low while real hourly wages continue to grow. As important as spurring job growth is wrangling inflation, and in this endeavor, the administration continues to make tangible progress. The CPI for energy goods declined in March, as did the price index for core goods, and the CPI for all items declined for the first time since the COVID pandemic. While the cost of goods is decreasing, so are energy prices. Complementary to our efforts to grow American prosperity, we are focused on improving efficiency across all levels of government, but especially the IRS. We just concluded a successful tax filing season, but the IRS still needs significant reforms to deliver efficient and cost-friendly results for the American people. In this endeavor, we have successfully cut $2 billion from the IRS IT budget without any operational disruptions. We achieved these cost savings by eliminating, renegotiating, and de-scoping wasteful IT and professional service contracts, and addressing long-standing efficiencies such as auto-renewed licenses unused for years. This intervention alone will save taxpayers hundreds of millions of dollars each year. We are also taking steps at the IRS to reduce administrative costs with a particular focus on paper processing, which has been a long-standing bipartisan goal. Last year, the IRS spent approximately $450 million on paper processing with nearly 6,500 full-time staff dedicated to the task. Through policy changes and automation, Treasury aims to reduce this expense to under $20 million by the end of President Trump's second term. In addition to making government more efficient, Treasury is committed to working alongside the White House to make America safe again. To that end, we have launched a maximum pressure campaign against violent cartels and terrorist networks. We have assessed tens of millions of dollars in civil penalties against organizations facilitating money laundering along the southern border. And by levering sanctions, we are choking off the financial lifelines of terrorists, criminals, and hackers from Mexico and Guatemala to China and Iran. In the first 100 days of the new administration, we have set the table for a robust economy that allows Main Street to grow. With Congress and the White House working hand in hand, we expect to see even more positive results over the next few months. Key to expanding economic opportunity for all Americans is making the Trump tax cuts permanent. We are eager to work closely with members of this committee to pass this bill into law. Together, we can build a stronger, safer, and more prosperous America. Thank you.
Thank you, Mr. Secretary. We will now turn to member questions, and the chair recognizes himself for 5 minutes for questions. Mr. Secretary, as I noted in my opening statement, I was pleased to see your endorsement of nuclear energy projects during the World Bank spring meetings last month. And on a bipartisan basis, this committee recently passed my International Nuclear Energy Financing Act, which would establish trust funds at the World Bank, the European Bank for Reconstruction and Development, and potentially other multilateral development banks. Senators from both sides of the aisle also support this concept. So would you support the idea of trust funds to benefit nuclear energy financing at the multilateral development banks?
Mr. Chairman, this administration supports an across-the-board effort to increase the nuclear power for civilian use throughout the world, and we think that the World Bank should make that a key effort.
Thank you. I also referenced my work over the past 5 years with the Treasury and others about IMF reforms. You also referenced that in your talk. Recently, the IMF shareholders agreed to a quota increase, and I appreciate the agreement that this agreement does nothing to increase the voting power of China or Russia, but were Congress to approve this agreement, it would allow future administrations to greenlight more general special drawing rights allocations close to $1 trillion. And that would mean $60 billion of new unconditional liquidity for the Chinese Communist Party, $25 billion for Moscow, and $7 billion each for the regimes in Caracas and Iran, with no sign-off from Congress. So even if rogue regime FDRs are rejected by Western countries, which we've seen in the case of sanctioned countries, they still could be exchanged behind the scenes for Chinese RMB, for example, and I believe this is unacceptable. Would Treasury, under your leadership, work with me to reform the SDR allocation process at the IMF?
Mr. Chairman, we believe the SDR process at the IMF should serve the goals of the United States of America and not other states. And as I said in my speech during IMF week, this administration is aligned with you in your goals on the SDR. And furthermore, we believe that the IMF needs to get back to basics in working with countries when there is a market failure in financial markets rather than helping large, well-financed countries.
Thank you. Well, we look forward to following up with you and walking through this. It won't be an easy task, but with international leadership from the United States, I think we can get there, and I think we will all benefit. And that means countries in trouble will benefit instead of just a general allocation approach. The president, since he's been in office, has championed high-profile investment issues revolving China. As everyone knows, he's been negotiating U.S. investors' acquisition of control, for example, over TikTok. In his State of the Union address, President Trump announced a major investment would see Americans take control of 2 ports near the Panama Canal that are currently owned by a Hong Kong-based business. I'm concerned that recently established outbound investment restrictions could make deals like this even more challenging. Under the regulations, U.S. investors don't actually know which companies are off limits, and Americans face bureaucratic hurdles if they want to take control from Chinese owners. What are your views on revising outbound program to change this? Since the president wants strategically to see American investors take control perhaps of some Chinese-owned entities, how do we make sure we get outbound rules right?
Mr. Chairman, I want to thank you and the members of this committee for leadership on this. I had a very good discussion with 2 members yesterday where we talked about the importance of establishing a either red light or green light and not having a yellow zone for outbound investment. The outbound investment security program is an important national security tool in our effort to restrict the PRC from exploiting the benefits of U.S. investment. We've been receiving notifications from the outbound program. We're monitoring the market, and we're trying to ensure that the investment community is aware and familiar with the program. We appreciate the interest from Congress, and while legislation will be important and helpful, we would like a bit more time to process, including the work mandated by the president to inform legislation.
I appreciate that. We look forward to working with you. I yield back, and I'll turn to the distinguished ranking member of the committee, Ms. Waters, for 5 minutes.
Thank you very much, Mr. Chairman. Secretary Bessent, this is the first time we've met. Is that correct?
No, ma'am. We actually met one New Year's Eve in the Bahamas. And I was...
He didn't make an impression. Why don't I remember that?
Well, you were much better at the electric slide than I was. And I was with the Prime Minister of the Bahamas yesterday, Prime Minister Davis, who sends his regards.
Well, were you with my husband when he was the ambassador to the Bahamas appointed by Clinton? Well, you're not going to like this. And so this is the first... I didn't remember that, but that's odd because you've been at Treasury, and I've sent you 5 letters to ask about what was going on under your leadership and only received a couple of cursory replies from your staff. Why don't you respond?
Ma'am?
I guess you don't know why you didn't respond. Secretary Bessent, you worked in finance before, right? You will find bipartisan support on this committee for small businesses and the institutions that finance them. I worked with Trump's first Treasury Secretary to pass $12 billion in support for community development, financial institutions, and minority banks and credit unions. So I was surprised when Trump first tried to eliminate the CDFIs, but it caught you by surprise also. You said that the CDFI fund plays an important role in expanding financial access. Unfortunately, you were not very persuasive last week. Trump proposed to basically cut all CDFI funding. Now, let's discuss your job before becoming secretary. Your hedge fund had a secret sauce for how you would make money for investors, a proprietary trading strategy. As CEO, you guarded that strategy. You never allowed unrelated persons to access your firm's computer records, data, personnel files, and algorithms, right? And I'm sure you wouldn't have allowed just anyone unfettered access to copy, change, or to use those records, right? I suspect not. And that makes good sense. What doesn't make good sense is why, as Treasury Secretary and acting CFPB Director, you would allow those unfettered access to the government system that handles trillions of dollars in payments. to the proprietary business records of entities regulated by the CFPB, or most alarmingly, to the tax records of hundreds of millions of Americans. But you still threw up the gates of our finance system open to Elon Musk and his band of 22-year-olds. Yes or no? Do you know the level, type, or nature of the clearances and security training required for individuals to access the information held in the computers of Treasury, IRS, or CFPB?
Yes, I do, and I think we would have a disagreement over the definition of the word unfettered.
Mr. Secretary, did all the individuals working with Doge who were given access to Treasuries and CFPB's computer databases receive all of the required clearances and security training before they were granted access?
Again, they were granted read-only access at Treasury. There were two.
So let me just say,
Doge employees.
Please, you can't filibuster here. This is not the filibuster playground. And so what you did was you let these strangers into our Treasury with access to all of the data, all of the personnel information, and you just opened the door. Why'd you do that?
No, ma'am. They were Treasury employees.
Oh, are you saying today in front of this committee that all of them were Treasury employees, that the 25-year-old who's being identified, who worked for Elon Musk, was allowed into the Treasury? Was that person there?
He was a Treasury employee, as was Tom Kraus, the senior person on the Doge team. There were only two people.
There were Doge employees also.
Sorry?
Do you know, were you aware that there were Doge employees coming into our Treasury getting all of our personal information?
Well, ma'am, there is no such thing as a Doge employee. There were Treasury employees.
I tend to disagree with you based on the information I have. Has any information been downloaded by anyone working with Doge from any of Treasury's or CFPB's computers? Answer yes or no.
Not to my knowledge.
You better learn.
Gentlewoman yields back. The gentleman from Michigan, the vice chairman of our committee, Mr. Hyde, is recognized for 5 minutes.
Thank you, Mr. Secretary, for being here. And I just have to note that it's ironic that this has been declared a no filibuster zone by the same people who walked out of a hearing yesterday in filibuster. So, and just to give you one quick brief moment, are you saying that there was no unauthorized or unsanctioned persons that had access to the systems that you are in control of?
Again, there were two employees.
Yep.
There were very strict guardrails, and they were there for an ERP function.
Yeah, so they were authorized and they were sanctioned.
Yes.
So not unknown, and Elon Musk wasn't one of those two people?
No, to my knowledge,
okay.
Mr. Musk has never been in the Treasury building.
Okay. All right. I have to hit on Burma and a little crypto, and if we have time, China. So I want to thank you for your actions that Treasury took this past Monday regarding Burma. The KNA, the Karen National Army, has become a haven for transnational criminal organizations that run illicit operations such as human trafficking and smuggling. The group has strong ties to the Burmese army, which has targeted religious and ethnic minorities such as the Rohingya since the civil war broke out in 2021. While the U.S. and our allies continue to impose sanctions against the military junta, unfortunately, the atrocities continue. My district, the 4th District of Michigan, is home to approximately 5,000 of these ethnic Burmese. And I'm just asking you, we need to do more to protect the people of Burma and to stop the genocide. Yesterday, I reintroduced the Brave Burma Act, a bipartisan piece of legislation that would require the president to determine on an annual basis whether to impose stronger blocking sanctions against the Myanmar oil and gas enterprise, the Myanmar Economic Bank, and foreign persons operating in the jet fuel sector of the Burmese economy, which has been a tremendous amount of their revenue. And it further limits the junta's ability to borrow at the IMF, which I think is one of the issues that the chairman was touching on. So these actions would target the heart of the military junta's revenue. So can I get your commitment that you're going to continue to work with my staff and us on a bipartisan basis as we try to address these issues in Burma?
Congressman, we're happy to work with your staff on this legislation, and thank you for your leadership on this issue. I share your concern about imposing consequences on persons who threaten the peace, security, and stability of Burma. Treasury has the tools to continue to take action for the people of Burma, and working with you, we will continue to do so.
That's great. And what's frustrating is while some of these sanctions have been put in place, a sanction's only as good as the willingness to enforce it. And we have seen them receiving financial support, the junta, from around the world, especially, frankly, as they ramped up production during the last administration. So I'll note it's not just Burma, it's places like Iran, that this illicit activity that has gone around the sanctions has been allowed. In some cases, Treasury has granted these licenses. I sit on the Foreign Affairs Committee as well, and we see this all the time. I want to touch on crypto. Yesterday, as I had mentioned, the committee held a hearing with House Agriculture, or attempted to hold a hearing with the House Agriculture Committee. Turned into a very important roundtable as well regarding digital asset market structure reform. So can you quickly explain how important it is for America to take the lead here, especially as we see China leaping ahead?
Yes, sir. We believe that the United States should be the premier destination for digital assets. And as members of this committee and the Senate are attempting to do, create good market structure around that, so that U.S. best practices are used around the world.
And that's really the point, right, is having American U.S. best practices to sort of set the pace for others to follow, rather than us trying to fill in the holes that others that may be created as others set that pace.
Yes, sir. And also that digital assets are an important source of innovation that will drive that can drive usage of the U.S. dollar around the world, as with stablecoin legislation. There is speculation that there may be up to $2 trillion of demand over the next few years for U.S. government securities from digital assets.
My time has expired, but I'll send you my question regarding Chinese debt trap diplomacy. So with that, I yield back.
Gentleman yields back. The gentleman from New York, ranking member of the Small Business Committee, Ms. Velasquez, is recognized for 5 minutes.
Mr. Chairman, I want to raise a point of order.
Yes, ma'am.
But I don't want the clock to be eating my time.
I'm sorry. Yes,
I would like for the witness to be swearing in before I ask my questions.
The chair doesn't see a need for that. You may ask your question. Your time can start the gentlewoman's time over at 5 minutes.
Secretary Bessent, you were on CNBC earlier this week making claims saying we are very close and maybe we will see some deals this week on tariffs. So tell us, tell the American people, tell small businesses and consumers, tell retirees, specifically, which countries are you close to striking deals with?
I'm sorry, Congresswoman, but that would not benefit the United States.
No. I'm asking you a question based on the statement that you made on CNBC.
And I am telling you that it would be detrimental to the interest of the United States for me to answer that question.
Why will that be detrimental?
Because as the negotiations may still be in process as we speak, as we are not at the end of the week yet, I am sure that you, through your question, would not want to compromise the U.S. negotiations.
Reclaiming my time.
Would you?
Secretary Bessent, the president goes into a press conference and claims that there are negotiations going on. And then the next day, there's no negotiations going on. So why would you not answer my question, and that will be considered detrimental to the American people, to the American economy. I do not understand. Despite your claim...
I'm happy to say there are negotiations going on. I'm not going to reveal the details.
No filibuster. No filibuster here.
So how long do you think those negotiations will take before they are concluded?
There are numerous countries, as I have said, if you saw my CNBC interview, which you referenced, that there are 18 important trading partners, and we are moving forward at all deliberate speed with those.
Do you consider these negotiations advanced negotiations?
Some of them are quite advanced.
So you expect this deal to be more than memorandums of understanding? You expect them to be full negotiated trade deals?
I believe that they will be the agreements in principle, and then we will paper them over in the coming months. But once we reach an agreement, then I am sure that the other countries will live up to it.
Okay. In congressional testimony yesterday, you said the U.S. has not started negotiating with China on tariff reductions. Does that continue to be your position, yes or no?
As you may have read...
Yes or no, sir?
As you may have read in the press, I will be going to Switzerland, and the negotiations will begin on Saturday.
Okay, so the president told you that that will be your answer today. So can you tell who from the Trump administration is engaged in those discussions?
Which discussions?
With China.
Trade discussions?
Pardon?
I'm sorry.
Trade discussions, yes, sir.
Well, the trade negotiations will be led by myself and Ambassador Jameson Greer, USTR.
And what about Pete Navarro?
Sorry?
Peter Navarro.
He will not be joining us in Geneva.
Thank God for that. Are those negotiations considered advanced?
Pardon?
Are those negotiations considered advanced?
As I said, on Saturday we will begin, which I believe is the opposite of advance.
Secretary Bessent, as Treasury Secretary and a senior member of President Trump's economic team, has President Trump given you the authority to finalize any trade agreement with China or any other trading partner?
As President Trump has stated, he will have the final decision on any trade agreement.
So you're telling me all of these increased prices, the stock market losses, the production delays are all based on the whims of Donald Trump, that you could strike the best deal with Canada, Mexico, or even China that is completely in our favor, giving us everything the administration is
Gentlewoman's time has expired.
And if President Trump decides at any certain moment, for whatever reason, not to take the deal, that will be it. I yield back.
The gentleman from Oklahoma, Mr. Lucas, who is chair of our Task Force on Monetary Policy, is recognized for 5 minutes.
Thank you, Mr. Chairman. Mr. Secretary, as the dust has continued to settle after last month's episode of Treasury market volatility, can you give an updated assessment of those events, and how would you characterize the functioning of the market during that period? During the dust up in Treasury markets?
How the market was very well functioning. It was volatile, but the underlying infrastructure worked quite smoothly, sir.
Does the Treasury Department have the tools necessary to address market volatility? You've said you may increase the use of the buyback program. Are there other authorities that might be helpful to address the challenges of the market?
Yes, sir. We have a very large toolkit that we can deploy, as does the Federal Reserve.
Taking a step back, Mr. Secretary, can you provide us with a sense of what regulations the administration is working on to bolster resilience in the Treasury market and the timelines when you would expect those changes to be announced? This is a core issue on the task force I and a number of my colleagues are working on.
Sir, the auction sizes, the current issuance sizes leave us well positioned to address potential changes in borrowing needs. I can tell you that investor participation in auctions, there's been broad investor support. Our weighted average maturity is about 61.2 months, which is quite fulsome. And we have implemented a buyback program with two objectives, liquidity support and cash management.
One last question along that line. I've long said that the administration should look at reforming regulations like the supplemental leverage ratio to relieve some of the constraints that market participants are facing in the Treasury market. I hope you'll consider looking at that.
Sir, Treasury does not look at that, but I believe that it is a high priority for the three regulators, the OCC, the FDIC, and the Federal Reserve.
Thank you. And as the SEC continues to implement their clearing rule, a number of firms, including those outside the United States, are looking to provide clearing services for U.S. Treasuries and their derivatives. How are you working with the SEC and the CFTC to ensure the integrity of the Treasury markets as these firms look to intermediate?
Sir, the Treasury market is a global market, and we welcome new participants, and we want to make sure that best practices employed in the U.S. are also employed globally.
And the reason I ask that is, and if you could specifically comment on the clearing of U.S. sovereign debt outside of the United States, what risk could that potentially present? And I come at that from the perspective, if there's a challenge in the market, if it's a U.S.-based entity, then the regulators who would make the difficult decisions are here. If it's outside of the United States, they might have a different perspective.
We are constantly studying that, sir. As of now, we do not believe that it presents a risk, but I will, as we continue our studies, I will have my staff interact with your team.
Absolutely, Mr. Secretary. And one final question. Primary dealerships has become an expensive proposition for firms, which in one explanation for participants leaving the market, it's one of the many explanations. Should we be looking at ways to make the environment friendlier to investors wanting to become primary dealers?
Sir, we saw at the recent auctions very low participation by the primary dealers, which tells me that there may be the regulatory function there that is preventing them from using their balance sheet for the benefit of the U.S. Treasury.
So clearly the task force that Chairman Hill was kind enough to set up and yourself, we have work to do. Thank you, Mr. Secretary.
Would you yield?
I would yield to the gentleman from Michigan.
Thank you. And I can get my China question in, so I appreciate my colleague doing that. I want to talk a little bit about the international financial institutions, the IFIs, such as IMF, World Bank, and they're falling short of addressing key challenges. So China, whether it's in Africa or Burma, has really engaged in a debt trap diplomacy. How should the IMF really help borrowers take the fund's advice when it keeps giving China a free pass?
Well, Congressman, as I said in a public interview after one of my IMF speeches, it is time for China to graduate from developing country status. It is the second largest economy in the world. They are a large, important economy, and they should no longer be granted the status of a developing economy.
I'd like to invite you, Mr. Secretary, to continue that answer in writing, and I thank the Vice Chairman and Mr. Lucas. Let me call on the gentleman from California, the ranking member for our Capital Markets Subcommittee, Mr. Sherman.
First, a parliamentary inquiry. Since the last speaker had an extra 30 seconds, can I have an extra 30 seconds?
Right. Mr. Chairman, already says that you give the extra 30 seconds to the next.
I would be happy to do that.
Mr. Chairman, I agree with you that special drawing rights should be increased only with congressional input, and I agree with Mr. Huizinga that we have to focus on Burma, Myanmar. I ask unanimous consent to put in the record a chart showing how the value of the dollar compared to other currencies has declined precipitously since Trump's so-called Liberation Day, and to also put into the record a CBO report issued just an hour ago that shows that Republican proposals to change Medicaid would in one case take 1.5 million people would lose their Medicaid benefits, and in another proposal would cost 3.9 million Americans their Medicaid benefits.
Without objection.
I also ask unanimous consent to put in the record a letter I sent to the Secretary, responded to by his Assistant Secretary, dealing with direct file, which means you don't have to pay TurboTax because the IRS has the software. And the response that I got, an absurd response, was basically, well, as long as, we just want to make sure TurboTax makes a lot of money, so we're not going to do that. And I would point out that the IRS could send every American, for their voluntary use, a proposed first draft of the tax return, since you already have the W-2, you already have the 1099, and you don't have all the input errors that come from people doing their own returns. But that is something that your administration is stopping. I would ask you, Mr.
Without objection.
Yes. I ask you, Mr. Secretary, to provide for the record within 1 week your best estimate of when the U.S. will hit the debt ceiling and exhaust our borrowing capacity. Can I count on you to provide that for the record?
Sir, the so-called X date is a moving target.
I'd like your best shot.
As I stated yesterday, we are moving on to the warning track, and we don't want to be on the warning track. And
I would ask you to provide the Congress the best information you can, but I'm going to go on to another question. I represent one of the two areas devastated by the Los Angeles fires. I spoke directly and on camera to President Trump and asked him to exempt building materials from these tariffs. The National Association of Home Builders says that these tariffs will add $11,000 to the cost of these fire victims rebuilding their homes. Can you assure us that in a country where we have a devastating housing shortage in general, but we have thousands of people in Los Angeles have to rebuild their homes in particular, that these fire victims are not going to face this additional cost to rebuild their home?
I will look into that matter, and I was...
That is exactly what the president said in January.
I was in Los Angeles this weekend, and I toured the devastation.
Thank you. I hope you saw the devastation of the Palisades, and I hope you won't be imposing another $11,000 cost on every home builder. Now, as to capital markets, where I devote most of my time, all of us on the subcommittee agree that we're trying to get people to invest in American stocks and build the American economy. And in fact, our tax code has hundreds of billions of dollars of incentives to get people to invest in America. China also has incentives to get the Chinese people to invest in Chinese stocks. But there's a difference. China only provides those incentives to Chinese people if they invest in Chinese stocks. American billionaires like investing in China, making tens and hundreds of millions of dollars in profit. Can you think of a reason why the American tax code should provide enormous tax benefits like the capital gains allowance to American billionaires who invest in Chinese stocks? Why is that in our national interest?
Sir, it's not just available to billionaires. If you were to buy...
Right, so why do we want to encourage...
buy a Chinese ETF, a very...
Why would we be neutral on whether I buy an American ETF or a China ETF? Don't we prefer American capital to be invested in America, or are we just fine with encouraging Americans to invest abroad?
Well, sir, we don't want to close the capital account, and we do want investors to be able to maximize their judgment where they should invest.
Let me go on to one more thing.
I have said I wouldn't bet against the U.S., but
please, next question.
People can.
Next question. Abu Dhabi and United Arab Emirates just announced that they were going to give $2 billion to a stable coin put forward by World Liberty Financial. This stable coin pays no interest. So You and I are both finance people, just want to check my math. Assuming a 4% rate of return, is this interest-free loan of $2 billion worth $80 million every year to World Liberty Financial and its Trump owners?
Sir, I haven't seen that. I don't know the expense ratio, and as far as I know, no stable coins pay interest.
So the New York Times is wrong. Please read the article. I yield back.
Gentleman yields back. The gentleman from Texas, Mr. Sessions, is recognized for 5 minutes.
Mr. Chairman, thank you very much. Secretary, welcome. We're delighted that you're here. Part of the challenge against you this morning, and I'm sure some days, is the explanation of the tariff matter that President Trump has initiated and sticking by. I'd like to provide just my input on that, if I could, that I think that President Trump sees the relationship with China by what it really is, and that is an unfair relationship, one in which needs to be not only looked at, but really something done about it. And I know that while we have PNTR, it should mean that we treat them the same way they treat us, but that is not happening. President Trump, as part of these changes, has changed the de minimis rule, and that de minimis rule was the amount of money that a package, when it comes into our country under this circumstance, whether it was looked at or not, whether a tariff was paid upon it. And I believe that there were Chinese companies taking advantage of that. Some 4 million packages a day were coming to the United States. And I say were coming because I do not believe that that rate is still occurring. As a result of that, what happened is it contributed to the fentanyl issue that we had because we did not look at these packages with the same viewpoint that others did. My point in bringing this up is that I believe that with the new numbers of 177,000 net new American jobs being created in the private sector, that there's an understanding by people who want to invest in America that this president is finally taking on the Chinese, who undermined not just intellectual property, but undermined with their government, the Chinese government, undercutting the price and manufacture of many products that were American made. Many of them, or some of them, might be power tools. And of course, we know Craftsman is an American made product. But it is not uncommon, was not uncommon for their tools to be on the internet at $400 or $500 and for a Chinese product to be brought in for $40 or $50. That undermined not just our intellectual property, but actually undermined the manufacturing that takes place in this country. And I'm delighted that you and the president are engaged in balancing that out, and I think that's what this 177,000 new American jobs net provided for us, because it's people who want to invest in the United States, knowing that finally we have a president that will protect that onslaught of Chinese goods, undercutting American, not just jobs and intellectual property, but the events that take place therein. And I think this president has done a great job, and I want to offer my support for that because I think that part of what the president